All right, let's dive into a revolution that's happening right now, in real time. Artificial intelligence. We're not just talking about cool tech here. We're talking about a massive, maybe once-in-a-generation investment opportunity. And over the next few minutes, we're going to build your investor's blueprint to navigate it. Yeah, this really says it all. This isn't science fiction anymore. AI has officially moved from a someday concept to the engine that's actually powering the global economy right now, as we speak.
And the speed of this change, it's just staggering. We're seeing a total reinvention of entire industries. From the AI models themselves, to the chips that power them, to the cloud infrastructure holding it all together, the pace is just something we've never, ever seen before.
And that's the $1 million or maybe the $1 trillion question, isn't it? With all this excitement, it's so easy to think that just throwing money at anything with AI in the name is a guaranteed win. But the truth, well, it's always a little more complicated than that. So here's our roadmap. We're going to map out who the big players are, look at the real case for investing, get honest about the risks, and then we'll wrap it all up with a smart framework to guide your thinking. Let's kick things off by meeting the players. First things first. Before you can even think about investing, you've got to know the lay of the land. You have to understand the ecosystem. So who are the key companies really shaping this whole thing? Let's map out the territory. You know, the AI world is incredibly diverse. You've got the giants like OpenAI who are really pushing this into businesses everywhere. Then there's Google DeepMind, which is all about pure boundary-pushing scientific research. Anthropic is carving out a super important niche focused on safety. And then there's NVIDIA. They're the ones building the essential hardware that powers literally everyone else. And don't forget the disruptors like DeepSeek, who are shaking things up with powerful open source models. So here's the key takeaway. The AI revolution isn't just one single thing. It's really standing on three interconnected pillars. You've got the software, which is creating the intelligence, the hardware, which is the muscle powering it, and the open source community, which is just accelerating innovation for everybody. Okay, so we know who's who. Now for the fun part. Why is there so much excitement? Why is this being called a gold rush? Let's dig into the powerful arguments for investing in this space. The first advantage is just the sheer mind-boggling scale. AI isn't some niche technology for one or two industries. It's a foundational layer that is being woven into the fabric of everything. Finance, healthcare, education, defense, you name it. This kind of widespread adoption creates massive, long-term growth potential that's honestly hard to find anywhere else. Second, and this is huge for businesses, AI is a productivity engine. It's fundamentally changing how work gets done. By automating tasks, writing code, speeding up research, it helps companies slash their costs and dramatically boost their output. And for an investor, that means one thing: better efficiency and healthier profit margins. Now, this is a really important strategic idea. Think of it like a gold rush. Instead of trying to bet on which single miner is going to strike it rich, you invest in the companies selling all the picks and shovels. Well, in the AI world, hardware companies like NVIDIA are the picks and shovels. They win no matter which AI model comes out on top, because every single software breakthrough creates more demand for their hardware. And finally, you cannot underestimate the power of open source. What companies like DeepSeek are doing is lowering the barrier to entry for developers all over the world. This just fuels this incredible cycle of super fast experimentation and global adoption, making the entire pie bigger for everyone at a breathtaking speed. Okay, we've seen the incredible potential, but a smart investor never ignores the risks. It's absolutely crucial to go into this with your eyes wide open. So let's talk about the pitfalls and navigate them with a clear head. The biggest, most immediate risk is something called a valuation bubble. Right now, a lot of AI stock prices are based on these incredibly optimistic dreams of what they'll earn in the future, not what they're actually making today. If that growth doesn't happen exactly as people hope, those prices can come crashing down hard. And there's definitely more to keep an eye on. Governments are scrambling to figure out how to regulate AI, and new rules could slow things down. The tech is moving so fast that today's cutting-edge leader could be old news tomorrow. And, of course, there's the constant danger of just getting swept up in the market hype. This really shows you the two different mindsets, right? The hype-driven investor is chasing headlines, ignoring the actual business numbers, and buying when everyone else is euphoric. The fundamentals-driven investor, they're focused on things like real cash flow, they're thinking years down the line, and they're spreading out their bets. That's the approach that protects you. So we've seen the massive opportunity, and we've seen the very real risks. How in the world do you put this all together? Well, let's build a clear, actionable framework, an investor's compass for doing this the smart way. Here it is, your 4-step framework. Number 1, diversify. Spread your investments across software, hardware, and the cloud. This isn't just about managing risk, it's about capturing value across the whole system. 2, focus on fundamentals. Look for companies with real cash flow and proven adoption. 3, avoid the hype. Don't make trades based on a news headline. And finally, number 4, think long term. This isn't a get-rich-quick scheme, it's a 5 to 10-year story.
So let's bring it all home. Make no mistake, the scale of what's happening is absolutely monumental. We are living through a shift that is as profound, as fundamental as the invention of the internet or the harnessing of electricity. But, and this is a really crucial but, just like in the dot-com bubble, not every company is going to be a winner. In fact, many will fail. The road ahead is going to be littered with companies that couldn't turn a cool promise into a profitable business.
Ultimately, the market always rewards substance, not just sizzle. The companies that are still standing in a decade will be the ones that built businesses with real, tangible value, not just the ones who told a good story. So for you, as an investor, what are the most important tools in your toolkit? It's not chasing trends. It's these timeless principles: patience, diversification, and the discipline to stick to your plan even when the market gets crazy.
The opportunity is historic. The risks are real. The framework for navigating it all is clear. The blueprint is now in your hands. So the only question left is, what kind of investor will you choose to be?